you are a BMNR shareholder or you thinking about shorting Bitmine, please don't do it, okay? We will talk about the correction that is currently going on. We will talk about Chamath, one of the most successful hedge fund guys ever, saying that shorting is like crying in the theater. It's very, very hard and almost impossible to make money. So all about this and more here in this video.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. Obviously, I bought a lot of options yesterday, about like $5,000 to $6,000 of my favorite Bitmine options. I just keep on buying them. Yesterday, they were very, very cheap. The price went down to $2.9. You remember I started buying at 11, then it went to 6, 7, 8, 5, and now it's 2.9. So I'm keep on bringing my average down. My whole option position, is average about like $5.8, right? So still a little bit, but I think with these options, I think that 1 or 2 weeks of bullishness could bring this option back to like $12, right? So it could be a double real fast from here where it's now, and or it's already like a triple from where the market price went on Friday, okay? So I think that if you never watched the video of mine, then you should stay tuned and follow me on all my social media channels, because we are looking for shares and stocks that can go up 10, 20, 30x. I did this, for example, with Tesla when it was a $23 company, then it went to 11. I kept on buying because I love the story, I love the company, I love the numbers, I love the news, and that's the same way I see Bitmine right now, okay? My subscribers bought houses or apartments, and I never advertise any other product here on this channel. Even when I get like crazy opportunities, like getting paid like $20,000, $30,000 for one video, but I never will do this for my community. I only tell you about my own product, xtendaytrading.com, because I think this is the best out there. It's a software that we create by our own that copies our professional day traders with the help of AI as well. And we are sending you all the buying and selling. Our team looking for the best opportunities on the market. Last week, we made 3 trades, 3 winners. So 100% win rate. It doesn't get better than this. So if you want to make also money on the short term, then check out xtendaytrading.com. If you have $10,000 or more, you can be part of that. I want to directly dive into the first clip of today. And this is obviously by our chairman. He was not 1 time, he was 2 times on CNBC during that sell-off on Friday. And he talks about corrections and what he sees for this month as well as the end of the year. Okay, here we go.
We've talked a lot over the course of the last several quarters and maybe even multiple years now about the secular bull run in technology. Is it over?
I think we should expect from time to time profit taking, because tech has been a leader for the last decade, and it is overbought. So I think it is going to be from time to time going to show extended weakness. But to me, the underlying story driving technology, which is the productivity miracle coming from AI, is still intact. Mary Erdos even talked about this earlier this week from JP Morgan, that there's been a payoff in spending, and Lisa Su at AMD as well as noting that productivity lift is the reason AI spending is rising. That's actually still a tailwind for tech stocks. And names like NVIDIA are still reasonably priced. I mean, NVIDIA at 28 times forward earnings is still less expensive than buying Walmart or Costco. Costco is almost 50 times forward earnings.
All right, Ross, with that in mind, as you watch the price action play out, does it surprise you at all that we've seen this kind of a sell-off? Could we expect more of this in the coming weeks?
I don't know if we'll get more of it, but investors should expect more of it. I mean, if you look even at the late 90s, during the heyday of the dot-com bubble, 96 double-digit sell-off, 97 double-digit sell-off in the NASDAQ, 98 big sell-off on LTCM and some other weakness, and then 99 even big sell-off in the NASDAQ. So double-digit sell-offs even in bull markets driven by new technologies and exciting new technologies are really common. And this one, is just par for the course, I think, amid a broader bull market. So as long as the technicals and the underlying trend isn't too damaged, I think it is a dip you can buy. But I think investors should always expect a little bit more weakness. We've been on a tremendous run off the April lows. That kind of momentum can't sustain forever.
Ross, do you feel as though there is any kind of a case to be made for a possible rotation trade? We've been exploring the possibility that maybe this broadening out could include less AI and tech and more things like perhaps energy or financials, something else along those lines. Does that thesis play out in the coming quarters in your mind?
Sure. And I think it's incredibly healthy that as AI is pulling back, we're getting some nascent leadership from things like energy. Healthcare has had a tremendous month thus far after being really beaten up for a couple of years. Financials, big banks, both in the US and globally, have held up solidly. So, obviously the headline indexes are going to be weighed if big tech sells off. But I think it's incredibly healthy, both on the earnings front and on the price front, that you're seeing some breadth. Especially at a time when the question about the broader economy outside of AI is how healthy is it, right? So this is a really good sign to me, and I'm happy to take a little bit of gains from tech and rotate into some nascent leadership there in other sectors.
Tom, the tariff tantrum issues aside from earlier this spring, specifically in April, we haven't really seen any kind of a pullback last that long. It seems like these things are getting shallower, they're getting shorter in duration. If it is the case here, does it still play out that way? What kind of stocks actually go and you want to buy on discount here heading to the year end?
Yeah, well, I think it is helpful to think about where we are in the cycle. I know the Fed is a little hesitant. The reason to cut in December, but the reason they're hesitant to cut is the economy is actually pretty healthy, and they just don't have a clear contour of how quickly inflation's cooling. That's a very good backdrop for corporate earnings, actually even corporate earnings to actually start to spread. So if the Fed gives us some guidance and visibility about, path forward, I do think business confidence picks up. That means that ISM starts to recover, and it is a broadening trade. So I would agree with the other speaker that, I like tech structurally because of AI spending, but there's still plenty of room for the small caps to work, which have really taken it in the gut as the Fed's sounded hawkish, and the banks. And so I'd be in sort of favor of a broadening trade as well. But I still like tech. And as you know, the AI trade comes under question every few months. There's always a big pullback. But for the last 5 years, investors have had to buy that pullback.
Ross, we'll give you the final word here. Does the Fed need to cut rates in December for this market rally to keep going?
They don't need to cut rates to keep the rally going. I think they should cut rates. I think there's enough labor market weakness and there's not enough upside pressure from inflation that they should be at least getting to their neutral policy stance with some haste. I don't think there's any reason to pause. We don't have any data, so I don't know what has caused the hawkish turn. Obviously, the underlying economy is not in recession. It's fairly healthy, but we're in a restrictive stance. I think we could get to a neutral policy and then go from there. I don't think they need to cut. I just think they should.
All right. I lied because, Tom, I'm going to give you the last word. I want to hear what you think. Does the Fed need to cut rates for this rally to continue?
I think from a market's perspective and from the economy's perspective, we know that high rates are actually causing pressure on the housing market. That is, something that I think the Fed actually has some can actually have some impact on. So I do think it makes sense for the Fed to cut.
So as you can see, he's quite bullish. He says, okay, he believes that the AI trade and the whole market took a normal correction. He expected that in the first 2 weeks of the market, obviously. And then he believes that maybe by November already, we will see a $7,000 S&P 500, okay? So more than 5% increase. And he thinks that also, if not then, latest by the end of the year, we should see a rally. And he believes that, and he backs that always by numbers. He says, okay, 78% of the months that we saw 6 months in a row growing asset prices in the stock market, usually the November and December is fantastic as well, okay? So you have like a 78% chance. And now with the recent dump, this chance get even better, okay? The market always needs to have like a correction to go even higher. And many people start to short the market, okay? They short the market, they short Bitmine, and this is one of the hardest things that is out there, okay? Because the bull markets are much longer, much more aggressive than the short-term periods when it goes down, okay? Here you have a graphic that explains this pretty much. You can see the bull markets, the run towards higher higher prices in the stock markets are much, much bigger and longer than the short periods compared to those big timings it goes higher are very, very small. Okay, so shorts need to be timed to perfection. And also, when you short something, you probably fight against a lot of people that just want to see the market go higher, okay? And every now and then, bear market rallies or short-term correction rallies are the most aggressive ones, okay? So it could be that we see now, let's say on Monday or next week, 10 days in a row, just, new bull market rallies, and those can be so aggressive. If you miss those, then you are actually missing maybe the best 10 days of the whole market of 2025, okay? Or the performance of Bitmine. And this is the hard part. And let me tell you not only that, but let me show you a clip of Chamath here. He is a billionaire and he has a podcast called All In. And here explain, he had one of the most successful hedge funds. He was into Tesla very early, Amazon, Salesforce. He made billions of dollars, and he says it actually perfectly in his recent podcast. Here's the clip.
Here's the thing with shorts in general, which I don't like shorting. So let me just say this. There's supposed to be a check on financial malfeasance, but it's not that. When you look at these short selling firms, for every one of them that actually uncovers malfeasance, what it really is them creating chaos and innuendo under the guise of their right to free speech. And what they do is they put out some screed that tries to move the market. They're positioned against the stock before it comes out, and then they hope to close the position out and make some money. I think that's just a pretty sad and terrible way to live one's life, but it's legal, and so you're allowed to do it. It almost makes no sense for Michael to become technically literate because he probably wouldn't have written it. So,
and to your point, the fear, uncertainty, doubt you can create if you're Michael Burry, if you did the big short and you shorted the housing crisis correctly. Now, that took 2 years for him to be correct. So these things are painful to execute on in his defense.
You don't make any money. Look, outside of my venture fund, I ran a hedge fund for, 7 years, 8 years. And here are our longs, okay? And you can find these clips on the internet. Tesla in 2015, Amazon 2016, Salesforce 2018. Just tagged it. And you know how much money I made on the short side? Because we always felt like we had to hedge. And so what we would do is we would bumble around looking for shorts. Never made any money. The one short we found was a wireless telecom operator, and it was a legitimate fraud. Its company's corporate address was a pizza parlor in Barcelona.
Diversified revenue streams.
Otherwise, my point is, it's just that shorting is just somebody's ability to cry fire in a theater, quite honestly. It's extremely hard to impossible to commit financial fraud as a public company in 2025.
So as you can see, it's very, very hard, even said by one billionaire that had the best hedge fund ever. He even says to you, shorting is really, really hard. If he is not good in this, then how you think you should be good in shorting something, specifically something like a retail loving company like Palantir, Tesla, or Bitmine, right? So please don't never short the market, never go short Bitmine, because that could be your last trade, okay? So I hope you like that. Make sure to tune in tomorrow, and we see each other obviously on the other side, because the grass is greener always on the other side. Check out xtendaytrading.com before raising our joining fee. There's always limited spaces available. You will have the call with me, and then we see if we can help you as well. $10,000 is the minimum. So check it out and see you tomorrow.